Don't mess with Chinese stocks under any circumstances. If you haven't watched this clip yet, this is exactly the reason why I keep up with financial news and wonder, hey, what's going on in the world? So I can use the knowledge I gather for investing to put my money to work. If you're currently looking into Chinese stocks, let me tell you, it's a bit complicated, but it's not too hard to understand. In this clip, I'll break down the different layers of Chinese stocks for you and point out what's really going on. It's complex, but by the end of this clip, you'll understand it well. I'm not here to push an investment. I'm just here to share facts, and you can decide for yourself. Thank you so much to everyone who follows the Save Money Monster channel. Thanks for every single subscribe, like, share, and comment. If you'd like to support our channel, you can do so using this QR code right here. All the proceeds go toward motivating my team to keep making even higher quality videos, and they also encourage me to keep writing content that's packed with value in every single line. Most importantly, the income we receive will allow me to access more information and also to use AI or any kind of applications that will help make our storytelling videos even better, with truly high quality. Chinese stocks right now, everyone says, hey, they're really cheap. They're such a value play. And yeah, they're pretty attractive to buy. But some people say no one can tell when China will bounce back. So Chinese stocks really fit that saying. If you say they're interesting, they really are interesting. But if you say they're scary, they're honestly pretty scary too. That's because they're quite complex and diverse. Whether it's Chinese stocks listed on the mainland A-share market, or Chinese stocks listed on the Hong Kong market, or Chinese stocks listed on the NASDAQ, they're all different, you know? And as everyone knows, it's no secret, Chinese stocks can be controlled. They can be manipulated by the Chinese government. But at the same time, the Chinese government also provides massive subsidies to certain industries, especially technology, and right now, especially high-tech industries, right? That's why some sectors have just skyrocketed, really taken off. But at the same time, the Chinese economy. If you ask whether there are parts that have totally crashed, yes, there really are, especially in the sectors that have slumped because of the real estate crisis that happened last year. That's just the truth. And it's also true that it still hasn't recovered. So the question is, if you want to invest in Chinese stocks, the question is the Chinese economy good or not? Previously, Chinese Premier Li Qiang spoke at the 15th annual meeting of the World Economic Forum New Champions, also known as the Summer Davos Forum 2024. He made comments that led people to believe that, yeah, the Chinese economy is actually in bad shape, because Premier Li Qiang mentioned the term 猪排revealed yuan. Honestly, I can't translate this into Chinese either. I actually had to look it up myself. It refers to comparing China's economy to traditional Chinese medicine textbooks, saying that right now, the state of China's economy is like a seriously ill patient. You can't use strong medicine, but instead, the patient needs to gradually recover on their own, naturally. And that's exactly what's happening. Foreigners hear this and interpret it in their own way. The Chinese premier says the economy is like a sick patient, yet they aren't using strong medicine. People assume China's economy is failing, but they ignore that recovery must happen naturally, as it is now. Foreigners misinterpret Li Qiang's words to mean the economy isn't doing well. Chinese media have already come out to clarify, saying you have to listen to the whole thing. But honestly, there really are parts of China's economy that are a total mess. So today, I'm going to break it down for you. What's a mess, what's doing well, and what's actually thriving, and where exactly those things are. Let's start with the messy part, which is the sector hit by last year's real estate crisis. Whether it's Evergrande or Country Garden, they're all in deep trouble. Back then, the real estate business in China made up 25% of China's GDP, or a quarter of the country's total income. The reason China was able to grow so rapidly, with GDP rising by double digits for many years, was because of the real estate business. But when things started to bubble up and the bubble was about to burst, the government introduced policies to make real estate companies realize what was happening and to cool things down a bit to prevent a real estate bubble. At that time, the government was already trying to implement policies, but there were still people who came out and For example, take Evergrande. The government set up 4 red lines, and Evergrande crossed every single one of them, which eventually led to its collapse. The government was like, "We warned you." So not only did they refuse to bail them out, but if anyone caused damage to the industry, committed fraud or anything like that and got caught, they would go straight to jail. Plus, they would have to pay full compensation for the damages. This caused Chinese stocks to plummet for 3 years in a row. FDI, or foreign direct investment, meaning direct investment from abroad, they simply did not come in at all over the course of the past 3 years. But since the entire real estate sector took quite some time to grow and then eventually became really hot, and because the Chinese people did not have that many other investment options available to them, most ordinary people ended up putting their hard-earned savings into real estate during the peak of the boom. This was certainly true for the vast majority of the entire country. But when the massive real estate bubble finally burst, it collapsed, causing a huge amount of ordinary people's personal assets to be severely damaged as well. This had a very severe impact on China's domestic economy, because even now, the overall demand or purchasing power of people in China really hasn't fully recovered yet. This means that if we're talking about stocks in mainland China specifically related to domestic consumption, for people in the country, which are mostly A-share stocks, they're still not that attractive. So moving on to the point about whether high-tech is interesting, yes, technology is interesting because the Chinese government is providing support, whether it's government subsidies, low-interest loans, and they've even shifted their focus. Where they used to support real estate, now they're supporting high-tech instead. But it's still not that easy. If you say, hey, the Chinese government is pouring money into supporting a certain industry or company, and you can just go buy shares in that company right away. Well, if it were that easy, everyone would already be rich. But I'll explain it to you step by step. Let's start here. Bloomberg reported that China's high-tech industries are expected to grow to 26% of China's GDP, or more than a quarter of the country's GDP by 2026. So yes, we're talking about China's high-tech sector, no mistake there. As for the standout high-tech industries in China, one of them is Chinese EVs. And now it's not just about EVs that can fly, but Chinese EVs are also already the biggest in the world. The government has been supporting the Chinese EV industry financially since 2009, and up to now, the total support has reached $28 billion, which is a huge amount. Second, the solar energy industry. China can produce solar wafers at the lowest cost in the world, basically flooding the global market. According to Wood Mackenzie, China now dominates 80% of the global solar market. Just look at this blue bar here. The Chinese solar market has the potential to grow by as much as 38%, compared to other solar markets also growing about 26%, but that's still less than China. The third industry is automotive batteries. China has a company called CATL, a giant in car battery manufacturing that is heavily involved in research and development. CATL is like its own city, with nearby cities dedicated to its support, including labor and factories, all focused on producing goods for them. These surrounding areas supplying raw materials have a population of 2.8 million. As a leader in China's battery industry, CATL also receives strong government support, covering almost the entire amount. The fourth industry is the steel industry. According to World Bank data from 2022, China exported 12 million kilograms of steel worldwide, making it the largest exporter in the world. Moving on, an industry that can't go unmentioned is China's semiconductor chip industry. China's major company in this sector is SMIC. SMIC is a fast-growing semiconductor manufacturer. Recently, the US banned selling chips 5 nanometers or smaller to China, right? They also blocked ASML and Tokyo Electron from exporting equipment capable of producing them. But now, China has managed to produce 7 nanometers chips, already used in the Huawei Mate Pro. This is the Chip War 101, and China has announced at the third plenum, which is the third full committee meeting, about technological advancement. They emphasized that they must do everything possible to achieve the goal of growing China's GDP by 5%. Now, after hearing all this, many of you have probably already written down the names of these companies and are thinking, hey, is any of these companies? If China is subsidizing and they're so massive, why not go all in? That way we can grow with the state-backed companies. But wait a second. It's not that simple. Like I said, if it were really that easy, everyone would already be rich. Do you know why? Because anything that happens in China, 1 + 1, it doesn't always add up to 2, folks, because the Chinese government can control things, and they control them way more than the West does, for sure. You can see how much America and the EU don't like China right now. President Joe Biden even said that China can make products this cheap because they can make them as cheap as they want. Why? Because China doesn't have to care about profit once they've made the product. They just care about competing. But China has a government that can provide as much financial support as it wants, so they can make products cheaply just to attack their competitors without really caring about profit. Whether it's about overcapacity, Chinese products destroying industries, destroying jobs, or destroying companies, stuff like that. And what Joe Biden or Ursula von der Leyen, the president of the EU, have said is that the low prices of Chinese goods are artificially low. They're low because the Chinese government, as they put it, come on, if there was no basis for it at all, would the president of the EU or the president of the United States really come out and say something like that? Or is it 9? But I have this chart from Bloomberg to show you. Yes, the Chinese government really does exercise a lot of control, specifically over the products they subsidize. They want to make them as cheap as possible so they can compete with rivals around the world. If you look here, this is a graph of the profits of companies that manufacture car batteries in China. You can see that the profit gap has been getting smaller and smaller over the past year. This is part of the government's design and control. And even though squeezing the profit gap can lower product prices and increase sales, or even make business owners richer, make China richer, and help them beat competitors, that's all true. But let me ask you, as an investor, if you are an investor and the product you invest in is being controlled by someone to continuously reduce its profit margin, not naturally, but by force, do you as an investor like that? And honestly, the Chinese government's control goes beyond imagination. The important thing is, it's almost impossible to audit or check. If you ask me, personally, I still stubbornly want to believe that Chinese high technology is still something worth investing in, because it's definitely going to be big. If you ask whether those 5 sectors will take off, I think they definitely will, because the government supports them, right? But the limits are what I mentioned. If you ask yourself, why not look at tech sectors the government doesn't control? By the government, I mean Xi Jinping. Sorry, just saying. Let's look at areas without such tight control, where it's not just about national security. Take communication technology, for example. For comparison, there's AI. When OpenAI's ChatGPT launched, right? Now it has about 200 million active users per month. That's because ChatGPT is super easy to use. They can access any high-tech chip in America, like NVIDIA chips or whatever, but the fact that it's so easy to access these chips means that ChatGPT has a ton of competitors. Because if you're a company in the US, let's not even talk about China, you can access these chips too. Anyone can. Anyone who can access the same kind of chips as ChatGPT has the chance to become a competitor, which is why so many rivals to ChatGPT keep popping up. But there's a company in China that does something really similar to ChatGPT, and that's Baidu. And get this, Baidu actually has even more active users than ChatGPT. Each month, Baidu has up to 676 million active users. Whoa! That's because China has over 1 billion people, and they don't allow foreign social media platforms, right? So people have to use domestic social media, which means Baidu doesn't have a lot of competition within China. That's why they have so many active users. And here's the important part. even though the US says it won't sell high-tech chips to China anymore, and people might think that means China won't be able to develop much more or compete with something like ChatGPT from America, but the United States government has officially banned the sale of advanced high-tech semiconductor chips to China. This specific order took effect on January 2nd, 2023. That means these major firms could stock up on inventory before that deadline. There are 4 massive AI companies in China that did stock up: Baidu, Tencent, ByteDance, and Alibaba. These 4 tech giants, together, they bought 800 processors and cutting-edge A100 GPUs with a total value of $5 billion from NVIDIA and requested delivery within 2023 to 2024. This specific number of high-end chips is more than sufficient for these 4 companies to use for at least another 3 years. That means the US chip war is actually giving a significant competitive edge to these 4 major AI companies in China, allowing them to continue their rapid expansion for the next 3 years. As long as they have the high-tech chips they've stockpiled, they can continue to expand for another 3 years, and no other company in China will be able to emerge or establish themselves as a serious competitor to these AI firms during that time. These 4 companies don't all do the exact same kind of business, so they're not direct competitors with each other either. This is what creates the dynamic of China's economy, the diversity among Chinese stocks, even though some people say the Chinese economy is going to collapse. There really are parts that are failing, and the parts that are growing are truly growing. The ones that are outstanding are genuinely outstanding. When the government supports something, it does so in a massive, spectacular way. So after listening to this clip, what do you think? What would you choose or not choose? Leave a comment. Or if you feel like, nope, I don't get any of this, then just go with a fund, maybe a Chinese fund. But at the very least, make sure you pick the right Chinese fund for the market, okay? Investing involves risks. Investors should study the information and make sure they really understand it before investing.